Hello and welcome to the review of the data and events for the week beginning the 24th of March from Trend Signal. A week following some fairly interesting moves certainly in the US markets. Bit of a dip midweek when the Federal Reserve announced, or Janet Yellen made a bit of a gaffe over interest rate moves and the timing of an increase when that might happen. The Dow was up 237 points on the week last week, so that's about 1.5%. The S&P 500, that made a new record intraday high on Friday, but then slipped back. But still on the week, it was up about 25 points, or 1.35%. The DAX was a big beneficiary of last week's moves. I think the sanctions were nothing like as bad as expected. The market certainly took it in its stride, and the DAX was the main beneficiary. As I said, that was up 330 points, which is about 3.6%. Gold, that was a big loser, as you'd expect, down $48. That's just about 3.5%. Crude oil, dollar-based commodity, you'd expect it to fall a little bit following the rally in the dollar. I think the Ukrainian situation, the talk of sanctions, is going to keep that market fairly volatile. So last week, poor German ZEW economic sentiment data on Tuesday. Our budget came and went with little reaction really, apart from most of that was felt by the likes of Aviva and LGen as the Chancellor removed the requirement for retirees to buy an annuity. Slower inflation in the Eurozone also undermined the euro even before the release of the ZEW data. The president of the ECB noted the effects of a stronger euro were unwelcome, suggesting that the ECB may consider more monetary measures to help the economy should inflation fall further. Low inflation is bad. Inflation is bad. Unchecked inflation is bad, but very low inflation or deflation is very bad for an economy as well. Companies don't have any pricing power. Consumers sit on their hands, which really affects consumer spending in general. In a deflationary environment, the massive debt piles that some countries have accumulated over the financial crisis since 2008, they become more of a burden on that economy. So inflation, low inflation, not good. Anyway, the main event from last week was the Fed and Janet Yellen's gaffe over interest rates, regarding certainly the timing of any interest rate rise. Interesting moves, though, really. We've always regarded Janet Yellen as a bit of a dove when it comes to monetary policy, and Mario Draghi from the ECB as a bit of a hawk. But it seemed the roles were reversed last week. I think some participants and economists had been expecting Janet Yellen, the Fed, to tip a nod to the recent weaker data in the US, and perhaps there was a slight idea that maybe the tapering of QE could be paused for a month. That certainly was not the case. Not only that, Janet Yellen in the interview after the release of the data basically said that they could be raising interest rates 6 months after the end of quantitative easing, or QE, and that really put the markets in a tailspin. Although equity markets recovered, but the dollar has been rallying ever since. Whether it continues to rally or not depends on data and events for the rest of the week. But certainly I think some of the damage has been done there. And as I said, gold also suffered as a consequence with the dollar rallying there. So overnight news continues to be dominated by Ukraine and Russia's move to, looks like, amassing more troops on the Crimean Ukrainian border. Equity markets had a little catching up to do this morning, Monday morning, following the late sell-off on Friday evening. We've had a little bit of data out. Let's go to Forex Factory. We've had a little bit of data out overnight from HSBC on the Chinese manufacturing. Although the markets didn't react too negatively, although the data was poor and pretty much underlines the slowdown being experienced in China. On this manufacturing data, anything less than 50 is a contracting number, or a contracting manufacturing sector in this case. But I think most economists now understand that China is definitely not growing anything like the rate of 7.5% as expected by the Chinese authorities. So, as I said, a weak start this morning for equities. The DAX obviously remains more vulnerable, especially following last week's recovery. Data this week, not a whole lot out really. We've seen the manufacturing and services sector data coming out, some fairly positive French data already out so far on Monday morning. The German data, in keeping with the ZEW survey last week, has been a bit softer than expected. We have another survey out in Germany tomorrow, the German Ifo Business Climate, which is a very respected survey, and that will and does have an effect on the markets. We have UK inflation data out tomorrow on Tuesday at 9:30, weakening again further to 1.7%. Obviously, as inflation becomes a lot more benign in the UK, that could have an effect on sterling. If we do continue to see that number slip. So that could have quite an effect on the British pound against the euro, against the dollar. Probably won't have too much an effect on the equity markets though. So the light calendar really. Then we jump to the US. There's not a lot of data out, as I say, this week. We got the Conference Board Consumer Confidence number in the States. The US consumer is still remaining fairly confident. We're expecting an unchanged to slightly firmer number there on the consumer confidence. New home sales, again, there's this fixation on home sales and the housing market in the States. That data tends to be quite closely watched, especially in light of the sort of paucity of data out this week. It could have an effect on the markets. Wednesday sees probably the most important data release this week in the durable goods orders, which it's a core number we're interested in, a fairly a slower number from last month, a 0.3% reading there. It's the core number that we follow. We then jump to Thursday. We've got the regular unemployment claims in the States, retail sales in the UK as well at 9:30, and then pending home sales in the US at 2 o'clock. This is the last week with the 4-hour difference. The clocks in the Eurozone and the UK go forward 1 hour on Sunday, and as a result we then go back to a 5-hour difference between the Eurozone, UK and the US. So that's it for the data and events this week, a week that perhaps will continue to be dominated by the Ukraine, Crimean, Russian situation and any potential moves by the West to impose more sanctions. So watch this space. Thanks very much for listening, and we will reconvene again on Thursday for a further run through. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.